folks, Dan Frio coming to you live today from Florida. So I'm down here vacationing for the week, but I will be posting videos each morning to keep you guys informed on what in the world's going on in the markets. So today we see the continuation of house prices, and this is going to cause people to continue to freak out because house prices are not crashing like Federal Chairman Powell was expecting, a lot of mainstream media was expecting, and there's YouTubers that have their whole stream based on the housing market crash. So for all those, sorry for all this news, because housing is still robust and still pretty darn strong, to believe it or not. So if you don't believe me, let's check this first article out, but let's first go over what's going on in the market. So what you're seeing on your screen right now is what I see on a daily basis. I focus in on the bond market. The reason why is because I want to figure out what's going on with mortgage rates. Okay, so to do that, we focus in on a few things. We focus in on the 10-year Treasury, which you're seeing right now, right through here. The 10-year Treasury right now is yielding 3.47. Over here, that means the rate or the yield is up today, 0.058. You can see this. It's live, folks, so you're going to see this moving as we go through here. We're following the mortgage markets. So to do that, we're trying to figure out what's going on with mortgage rates, and what gives us the key importance or the factors going into that is what you're seeing right here on the screen, the MBS market. Don't follow the treasuries. Don't follow what other people are saying. If you want to figure out what's going on with mortgage rates, watch the MBS market, because MBS stands for mortgage-backed securities. So it's a bond that trades on Wall Street. Its yield is the biggest component of your mortgage rate. So what you're seeing right now is, like I said, you can see this moving live. We're down 14 ticks. So what does that mean? Well, the price of this bond is down 14 ticks. What happens? Well, when the price goes down, we got yields going up. So this is probably going to see about a 0.05 increase in rates. Nothing to really write home about, nothing to lose any sleep about. But some areas that I want to show you guys is right here. This just came out hot off the presses. You can see it right here. 4/4 of 2023 at 8 a.m. early in the morning. So we have this CoreLogic Home Price Index reported is for February. The recent Case-Shiller Index released was for January. The CoreLogic HPI is a 3-month weighted average and is not seasonally adjusted. What did it come in at? Home prices up 4.4 year over year in February, increased 0.8 month over month in February. So people are starting to really freak out. They're like, okay, where's the crash? I've been sitting on the sidelines waiting for all these houses to come to market and get foreclosed on and everything else. I want to buy a house. I think you're going to have a long time to wait. I don't see the housing market really cooling off, and especially not crashing like a lot of pundits are saying, because there's no economics behind it, folks. There's not way too many houses on the market with little demand. We have demand that kind of went down last year because of rates, but it's still robust, and I can validate that or verify that on a daily basis, because this week, just so far this week, we're averaging about 40 consultations a day. Guys, I have 6 loan officers, meaning they're working around the clock answering people's questions about first-time home buyership. So if you're in the market, you're saying, hey, I'd love to kick the tires about buying my first house. What do I do? How do I find a house and all that stuff? Please, guys, visit us at therateupdate.com, where there's links down below. Give us a call or schedule a meeting with us. That's what we pride ourselves on. That's the one unique thing that we do different than a lot of people. We want you setting up a consultation with us so we can get out all those, give you answers to all the questions that you have before you start this process. So without further ado, that's the news that's probably freaking people out for today. But is there anything else out there we need to be concerned about? Not really. What we see right here is yesterday we had the manufacturing index came in and it's starting to drop, which we expected because of what the Federal Reserve is doing. And then we have the JOLT index. What the JOLT index is basically, if you look down through here, it's the number of job openings as all positions that are open on the business day, the last business day of the month. So that's how many job openings are out there. Their previous reading was 10.8 million job openings. My goodness, that's a lot. Forecast for this time is 10.4. Okay, so only time's going to tell with that. Any other news for today? Not really. And then the rest of the week, we just have employment numbers. And then on Friday, we have Good Friday. The markets will be closed all day. So that's what's happening there. Let's go to the headline news. Anything on Yahoo Finance that we need to see? Well, the markets are loving something. Look, we got the S&P, Dow Jones, NASDAQ, and the Russell all up. One good news everybody's celebrating is the merger of WWE and UFC. Just kidding there, guys. Some people love it. Some people are like, who cares? Some of the other things in the news right now, Jamie Dimon says the banking turmoil is not over. Well, obviously he's going to say that because he's in the banking field. Let's look at what would be his goal here? Or I always say you have to read into a lot of this. Is there something in it for Jamie Dimon? Well, he's already a billionaire, so he doesn't need the money, but he loves the power. So let me look at it this way. If you see a lot of these regional banks having trouble right now, and you're sitting there saying, okay, I can have my money in the regional bank and be secure or not secure, or I can move it to one of the big banks and be maybe much more secure at those levels. Well, what would you do? Well, you'd move your money over to the big banks. That's what we don't want. Okay, we don't want a monopoly of the whole banking system, controlled by 3, 4, 5 banks. So the regional banks are needed, and we want this, basically liquidity there and everything else fixed. The FDIC and the Fed did a pretty darn good job, basically containing all of that. Other news that's in the market right now is OPEC. OPEC just came in and they're cutting productions yet once again. They did this a couple months ago just to kind of tick off Biden, and they're doing it again. So you're probably going to see oil prices going up and pain at the pump continuing on that end. Let's go to CNBC. Have anything that we want to know? S&P opens higher, looks to a 4-day extension. That is breaking news. So we got all the markets, like I said, opening higher. Again, here, the headline news on Yahoo and CNBC look about the same. We have Jamie Dimon, Biden administration with coal. I don't even want to touch that. Credit Suisse. Oh, here's an interesting article. The Credit Suisse chair says, I'm really sorry. I'm truly sorry that we kind of messed up this whole thing and we were committing fraud and all this other stuff and our books were bad, but we're really sorry. So that's okay. Just don't worry about it. What do you think is going to happen? Okay, this bank should have been closed down several times already. So that's a whole nother animal for another time. Let's get over to Market Watch to see what's going on with the banking stocks that we follow on a daily basis. So if you watch me on a daily basis, a couple weeks ago when the banking crash happened, we had Silicon Valley Bank out there that crashed, and then Signature Bank, and then some of the other ones kind of repercussion through it. I said, watch these bank stocks because all of them kind of got washed out with the bathwater, but they're all not bad. So we're starting to see, I put a list together of some of the banks that were basically in the headlines. You can see UBS is up 1% just today alone, pre-market. We got First Republic Bank is down 0.55. I don't know if that's ever going to really, really recover. Goldman Sachs and JP Morgan Chase. Oh, JP Morgan Chase, that's what Jamie Dimon controls, up 0.1% on the day, so nothing there. There's really not any major movers right there. So good news on that front. Let's look over to what in the world the Federal Reserve is going to do at the next meeting. Well, I got bad news here. It looks like they're going to raise rates at the next meeting. How do I know that? Well, let me get my big head out of the way and explain this to you. So what you're seeing right now on the screen is where the federal funds rate is. So what in the world is the federal funds rate? Well, when the Federal Reserve raises rates, this is the rate that they're raising. They control the federal funds rate. That's it. So right now we have a target range of, you can see right through here, 4.75 to 5%. Okay, so that's where we are right now. So how do I know that they're going to actually move or increase rates? Well, we go to the futures market over the Chicago Mercantile Exchange, and this plays a huge role. This is where money's going. You're talking big money. Okay, so now we look over here. Where we are right now? Where are we now? Right here, 4.75 to 5. So there's a 38 probability now that in May the rates will be that. But the probability is it's going to be to 5 to 5.25. That means most likely they're going to raise rates 0.25% to get us to where we need that to be. Again, it's 4.75 to 5. If they're going to raise it to 5 to 5.25, that's where it's got to move. Okay, so it's got to move there. So the nice thing is here, look at the trajectory over time. So let's get to here. The May meeting, there's a 61% chance that they're going to bump rates another quarter. But if they don't do it, there's a 59, almost a 60% chance of in June that they'll do it. So one of these meetings, they're going to do it. Then from there, look what happens is the blue section is the most highest probability of where the federal funds rate is going to be. Look out how it continues to go down and down and down all the way through the fourth quarter of 2024. So get through the next few months, guys, and from there, I think that we're going to be in a recession for sure. You're going to start seeing mortgage rates spin around. Just make sure you're in a good financial spot to look at housing if that's what your goal is in 2023. So now let's get over to where mortgage rates are for the day. So we've seen this right here. Here's what's going on in the MBS market. Let's refresh this thing to see what's going on. And we have the MBS market down 28 right now. So that means mortgage rates are going to go up. Why? How do I know? This is the price of a mortgage-backed security bond. When it goes down, there's an inverse relationship with the rates. They go up. So if the price goes down, rates go up. If the price goes up, the rates go down. So we love when this is up. We don't like when it's down. This is probably going to mean that rates are going to go up maybe 0.08, maybe 0.1. I don't think that. Let's get over to where rates are. So these are where rates closed yesterday. This is a report by Mortgage News Daily. They do this every day. If you want this report, you can subscribe to it down below, or you can subscribe to my newsletter down below, which gives you this and a whole bunch of other stuff, charts, graphs, newsletters, and everything else that's going to inform you guys what's going on in the market. I don't sell the data. You don't have to worry about getting solicited, and there's nothing in there to buy. So relax. You're all good. So this is where mortgage rates are. These are the top 6 products people use. The analysis behind this is this, and I figured it out in the last couple of days. What they did is they surveyed mortgage lenders all over the place, and they say, if you had a borrower looking to buy a property, they're looking to put 20% down with a 740 credit score, it was their primary home, what would the rate be? Here's what it is. So if your rate's not this, there's probably a very good reason. It's because you don't have a 740 credit score. You don't have 20% down. You might be buying a different kind of property. Or, again, this is rates on an average. So this is the average rate out there in the economy right now. So that is the report for today, guys. Sorry I'm dressed like this. I just got done walking me and my wife. We got back. I wanted to do my report because I have some conference calls to do later this afternoon. So I hope you like my videos. If you do, all I ask you to do is give me a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. God bless, guys. Thanks so much for watching. I'll see you tomorrow. Bye-bye.